Hi guys, welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. In this video, we will talk about how money works. So make sure to watch the full video. 1. Medium of exchange. Money works as a medium of exchange by providing a standardized and widely accepted means of conducting transactions between individuals and businesses. Instead of bartering or directly trading goods and services, people can use money to purchase what they need from anyone who is willing to sell it. Money serves as a convenient and efficient way to exchange value, and it can be easily divided into smaller units to accommodate transactions of varying sizes. For example, if you want to buy a loaf of bread from a bakery, you can use money to pay for it, rather than having to trade something else of equal value, such as a dozen eggs. The bakery can then use that money to purchase other goods or services that it needs from other individuals or businesses. By providing a universally accepted and standardized means of exchange, money helps to facilitate the exchange of goods and services and supports the functioning of modern economies. 2. Store of value. Money works as a store of value by allowing individuals and businesses to save and accumulate wealth over time. Rather than having to hold on to physical goods or assets, money can be stored and used later when needed. For example, if you receive a paycheck, you can deposit the money into a savings account at a bank, where it will earn interest and be held until you need it for future expenses. This allows you to build up a reserve of wealth that can be accessed when needed, rather than having to rely on physical assets that may be difficult to store or sell. Money's ability to serve as a store of value is based on its stability and predictability as a currency. If the value of money fluctuates significantly, people may be less likely to hold on to it as a store of value. However, if the value of money remains relatively stable over time, it can be a reliable way for individuals and businesses to accumulate and store wealth. Overall, money's function as a store of value is an important aspect of modern economies, allowing for long-term financial planning and helping to support economic stability. 3. Unit of account. Money works as a unit of account by providing a common standard for measuring the value of goods and services in an economy. This means that money is used as a benchmark or reference point for pricing and transactions. For example, if you want to purchase a television, you can see that it is priced at $500. This price is denominated in the currency of the country where the transaction is taking place, and it represents the value of the television in terms of that currency. By using money as a unit of account, prices can be expressed in a standardized way, making it easier for buyers and sellers to compare prices and make informed purchasing decisions. In addition to facilitating transactions, money's role as a unit of account is important for economic planning and analysis. For example, governments and businesses can use money as a way to measure the overall health of an economy by tracking metrics such as inflation, GDP, and other economic indicators. Overall, money's function as a unit of account is a crucial part of modern economies, allowing for standardized pricing and transactions, as well as facilitating economic planning and analysis. 4. Standard of deferred payment. Money works as a standard of deferred payment by allowing individuals and businesses to settle debts or obligations at a later date. This means that money can be used to make purchases or enter into contracts with the understanding that payment will be made in the future. For example, if you take out a loan to purchase a car, you agree to make regular payments to the lender over a set period of time. The money you use to make those payments is considered a standard of deferred payment because you are using it to pay off a debt that was incurred in the past. Similarly, if you purchase goods or services on credit, you are using money as a standard of deferred payment, with the understanding that you will pay for those goods or services at a later date. Money's function as a standard of deferred payment is based on its stability and predictability as a currency. If the value of money fluctuates significantly, it can make it difficult for borrowers and lenders to agree on the terms of a loan or credit agreement. However, if the value of money remains relatively stable over time, it can be a reliable way to settle debts and obligations. Overall, money's role as a standard of deferred payment is an important aspect of modern economies, allowing for transactions to take place even when payment is not made immediately. 5. Investment. Investing is one of the ways in which money works. Here are some key aspects of how money works in investing. Potential for returns. Investing involves using money to purchase assets that have the potential to increase in value over time. These assets can include stocks, bonds, real estate, and commodities. When the value of the asset goes up, the investor can sell it and make a profit. Risks. Investing also involves risks. The value of the asset can go down as well, resulting in losses for the investor. The level of risk depends on the type of asset being invested in and market conditions. Diversification. One way to manage risk in investing is through diversification. This involves investing in a variety of assets to spread out the risk. By diversifying, investors can reduce the impact of losses from any one asset. 6. Inflation. Inflation is another way in which money works, and it can impact both individuals and the broader economy. Here are some key aspects of how money works in inflation. Definition. Inflation is the rate at which the general level of prices for goods and services is rising, and the purchasing power of money is decreasing over time. This means that the same amount of money can buy fewer goods and services than before. Causes. Inflation can be caused by several factors, including an increase in the money supply, rising production costs, and higher demand for goods and services. Impact on purchasing power. Inflation can reduce the purchasing power of money over time. This means that the same amount of money can buy fewer goods and services, which can lead to a decrease in the standard of living for individuals and households. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.